Hey everybody, welcome back to another episode of the Agent Rundown.
Real estate coffee talk.
I'm Christina.
I'm Andrea.
I'm Angel.
And Marie.
And today's topic is on credit repair. The reasons we're bringing this topic is not just because of how credit is affected right now, but your credit score is tied very closely to your interest rate and your ability to obtain a loan. So today we have Sandra from Fix Your Credit Consulting here to clear up some things for everyone. Thank you so much.
Hi, everyone.
Thank you for coming.
Thank you for having me. I'm excited to be here with you guys.
We're so excited to have you, and I wanted to just jump right in for the sake of time. And so I know that you're advising, everyone out there, if they're able to pay their mortgage right now, even if they have the capability of having it deferred through their mortgage servicer, you're advising them to still pay it because of an impact on their credit, possibly. Can you explain a little bit more about that?
Yeah, absolutely. So there are a lot of mortgage companies that are allowing people to defer their payment for a few months if they need it to be deferred, but they are going to put forbearance on the credit report under like the subject line of the account. So that can hurt you in the future if you are looking to refinance or buy a home. If lenders see that, they might not like that. And so you don't want to have that on your credit report if it is going to hurt you. Even though they aren't going to report you late, it still could impact you in the future if they see like, okay, well, you couldn't pay your mortgage for a few months. How do we know you're going to be able to pay it in the future? So I would advise people to still pay their mortgage. You can get other things deferred that won't affect your credit, like credit card payments, car loans. Those won't affect your credit, but you have to make sure you call and request a deferment. Otherwise, if you just don't pay it, they're going to report you late. And when they report you late, your scores can drop by about 50 points at minimum.
That's a lot. I mean, that is a lot, especially in terms of, when it comes to your interest rate when you're applying for a loan too.
I do
Make a huge difference.
I do have a question when you say like that it could report forbearance. Is that the same? Like, does it report as long as like a late payment would report?
Can you repeat that question one more time?
You were saying that it would report as like forbearance and not a late payment if they deferred the mortgage payments.
Right. Okay, I understand that. It would stay on the credit report for as long as the account is active and showing up on the credit report.
Oh, wow.
Wow.
Yeah.
That's so good to know.
Wow. And so obviously, we mentioned you guys that credit is such an integral part to getting your loan and how much your payment is going to be on a monthly basis or even your ability to obtain a loan. Sandra, what are some tips that, you can give us about boosting your credit score?
So I recommend that everyone puts their accounts on automatic payments. So like if you have credit cards you use frequently, set them up on automatic payments. You can always, change the amount when you get the statement, but that way you don't have to ever worry about getting reported late. I would also recommend doing that with car payments, even mortgages. For example, I had a client recently reach out to me. He had sent me a picture of his credit score was 850. And I was like, and when we started working together a couple years ago, he was in the 500s. And I was like, what are you doing? He's like, well, I just took your advice. I set up everything on automatic payments and I don't leave a balance on my credit cards. I pay them off. And I was like, well, that's great. That's good to know. I can tell more people, just set up automatic payments, keep your balances under 30% of the limits if you are using them, especially when you're trying to use your credit to buy a home or buy a car. The lower you have your balances, the higher your credit scores are going to be. Be vigilant and keep an eye on your credit. You can monitor it through like Credit Karma for free or Experian for free. That way you can see what's going on with your credit. Especially right now, everyone has nothing but time on their hands. So you can just go pull up your credit report, check it out, see what's going on, see if anything doesn't look, correct to you. There's things that, can be removed or disputed. Like if you have too many inquiries, that can also hurt your credit scores. If you have any previous lates on the account on your credit or even collections that you've paid for that haven't come off, all of those things by getting them removed can definitely bring your credit scores up. So definitely keep an eye on your credit. Like I said, you can get it for free through Credit Karma and Experian. We also offer free consultations over the phone where we'll pull your credit report, review it. We pull it from a site called Identity IQ. So it'll give us access to all 3 reports for only $1. And once we, go through it, we'll tell you everything that's affecting your credit. what we can do to help you, and, you know, kind of give you an idea as to what your credit score would be after we work on it.
I do have I have a question. What are the types of things, and this may sound, obvious, but what are the types of things that really hit people's credit?
So collections I see often. I see late getting reported too. Usually it could be, you know, a credit card late that they just forgot about. Um, yeah, that's pretty much most of it. It's just late, and it can be just on like car loans too, not just credit cards, but you know, lates and collections are the major thing, and inquiries, you know, especially if someone is, you know, car shopping, if their credit scores are low, the dealer will pull their credit like crazy. And before you know it, you'll have like 20 inquiries on your credit report. And each inquiry
That
can
literally
cost you.
happened to one of my clients. They went from place to place to place to place,
Mhm.
and it just killed his credit. It was horrible.
Yeah, you're looking at a 2 to 4 point hit just by, you know, depending on how many inquiries they pull.
Mm.
Sandra, for mortgages, when the mortgage, like let's say you're shopping a mortgage, doesn't the credit card company, like the Experian, the Equifax, don't they look at that as, okay, they're shopping around and not continue to ding? Like if I went to, you know, Bank of America and they pull my credit for a loan, and I went to Chase and they pull my credit for a loan, is that still going to ding it every time? Or does the credit card company go, oh yeah, she's shopping for a loan, we're good?
No, it's still going to ding your credit scores. You know, they may see that and they take that into consideration, but it's still going to hurt your credit score. And so if your credit score, you know, is lowered by it, it's going to, you know, it could affect your interest rate. It could affect your approval odds. You know, I get a lot of clients who are referred to me by like business lending companies that do business credit, business loans, because they can't get them funded because they have too many inquiries. You know, so it does impact the credit. Lenders don't like to see that you're out shopping around for too much, you know, credit. You know, so it does hurt.
I do have another question too. You know, you had brought up your previous client that was in the 500s, now in the 850s. I know that, just for the sake of everyone that's watching, that might be, you know, like, hey, maybe this is something I should get started now. Is there like an average time frame that it takes to go through like a credit repair process? Like, I know everyone has their own unique journey and like situation and their starting point, but is there like an average, or is there like a, you should start now if like your credit score is at this, or is there any guidance in that direction, like in that area?
Yeah, absolutely. I mean, if your credit scores are under 680, you should definitely get started on getting them up, you know, to the 700s as soon as possible, because the higher they are, the better chances you have of getting approved and of getting a better interest rate so that you can save money.
Can I just really quickly step in right here and just give it like a live example? I had a client who had under 640, and then if he had over 740, it would have made like a $600-700 difference in their monthly payment for their mortgage. For the same loan, for everything to be the same, the interest rate gave them that big of a difference in payment on a monthly basis. Can you just put that into perspective?
Well, just
$200 times 12.
Yeah, to
get $9,600 just on top of, you know, what you would normally be paying if your credit was good every year.
Well, to piggyback on that, so FHA, because of everything that's going on, they just changed their minimum requirement. It used to be in the low I think 640. Now it's back up to 680. So not only does it affect how much you can borrow, sometimes you might not qualify for a loan if something like that happens with FHA or any of the mortgage lenders.
Yeah, and to finish answering your question, Angel, so with credit repair, it could take anywhere from as little as 3 months to see, you know, a change, or up to 12 months, depending on how bad their credit is. You know, I get people from all over the spectrum that may just have a couple of items that need to remove, to as much as 20 accounts, you know, because they filed bankruptcy. And so now they have all these accounts from the bankruptcy, or, you know, just had too many collections, you know, from medical, you know, reasons. So it really depends. You know, I start to get results from my clients in as little as 40 days, but some things can take longer to remove depending on how old they are too. So like if they're more recent accounts in the last couple of years, those can take time to remove. So that could be a client that might be with me for 6 to 12 months. You know, but if they're older accounts, closer to like 4 years of like being charged off or something like that, then those are a lot easier to clean up.
That's really good to know for everyone to know, like, just like that's why I wanted to kind of put a timeline because I don't know what, you know, I think everyone has a different idea of what credit repair looks like in their head, whether they think it's like something instantaneously, and then other people, I think that it may take years before you can even like qualify. So I just want people to know, like, to take the step to do it, you know, because it could be as short, like as short as 40 days, as you said, or it could be, you know, 12 months or longer. So it's just like, I just want to make sure that that's pointed out.
Yeah, one of the things we also do besides credit repair, we consult our clients on what else they can do to improve their credit, whether it's like opening up some secured credit cards because they don't have any accounts open to start rebuilding their credit, or getting added to a family member's credit card as an authorized user to help them rebuild their credit. Things like that I'll go over with them and advise them on doing. We also offer trade lines. So if they need a quick boost because they just don't have their scores high enough to qualify for the interest rate that they're trying to get, we can have them piggyback onto some of our own credit cards to boost their credit. And so like we, you know, these are specifically just for clients. We don't use them, but we can add them to the account just for a couple of months to help them get the boost that they need.
Oh, that's great.
That's great. Yeah.
So Sandra, can you talk about, we've heard this before from mortgage lenders, don't close credit cards.
Yes, I've heard
Yeah.
Can you
Yeah.
touch base on that and explain why? Why would
Yeah,
you?
absolutely.
Why would you not want to?
Because you're going to be losing the history of that account by closing it and the available credit. So especially if it's an account they've had for a long time, it can ding their scores by a minimum 50 points. So we definitely don't advise closing accounts, especially when you're doing it during a period of where you're trying to buy a house or
Yeah.
do something with your credit. You know, even like closing a car loan can drop your credit scores because you're now losing that account. I see it happen all the time. So, you know, definitely tell your clients, don't buy cars, don't close your car loan, you know, don't, you know, do anything with your credit that's going to, you know, change it. You know, even opening a new credit card can drop your credit scores. Just because your credit scores are like 30% of it is determined by your credit history. So if you do anything to throw off that history, that can definitely drop your scores.
Wow.
Awesome. Good
There's
to
so
know.
much information. Yeah. Like, so what you're really saying to summarize all of it is that everyone needs to call you because there's so many
Yeah.
factors that like in the, like, I'm sure it's like a, like, just like our clients, it's like a puzzle piece, right? Like everyone's situation is so different. It's so hard to just advise. You're giving really great general information for everyone to kind of like, you know, plant the seeds on like who it resonates with or needs it. But overall, like you have to like paint the picture for each individual person. And so that's where you come in handy. It's like, I love that you're just an expert in it because it's something that's a foreign concept for me.
Thank you. Yeah.
A last question is, what would our clients expect to pay? Are there like different categories, like, oh, I'm at a 680 and I need to be at a 700? Is that less expensive than going to a 500 to an 800? What's kind of like a pay scale?
Yeah.
Yeah, so everybody's situation is different. So we don't have like a set cost. We review the report and see what they have that we can work on, and then we'll determine what the cost would be. But yeah, absolutely. If you're at 680, you wanted to get to the 700s, it's going to be cost less than somebody that's in the 500s because they're going to have way more stuff to work on.
Right.
But we are fair and we do offer payment plans. You know, we want to help everybody, and so we try to make it affordable for them. By offering them payment plans where they can, you know, split it up over, you know, even up to 6 months, just to help them, you know, because I know everybody, you know, credit is important. And if you don't have it, you can't do anything unless you're, you know,
Yeah,
cash
you
heavy.
even like renting, you guys. I do a lot of leases. I do property management. I can't tell you. I mean, there's good people out there. Obviously, they're not my properties. I'm managing it for different landlords. And if they don't want somebody with somebody less than, you know, 600 or 650 credit, what am I supposed to say? And I see families come in there and mom and dad have really bad credit with little kids and they're like, what can I do? I'm sorry, I can't make the decision. You know what I mean? It really affects all parts of your life and being able to do anything from housing to, you know, cars, purchasing things, your ability to purchase.
And the crazy thing is that the higher your credit score, the less you pay. The lower your credit score, which unfortunately typically is people that don't have a lot of money because they've gotten into this situation, they get worse interest rates, and they're the ones who need the better interest rates the most. So credit is so important.
Absolutely. And
Like,
I don't
your
know if I
credit
told
can
you guys.
also be good if you, even if you don't have that much money. You know what I mean? If you manage things correctly and don't put yourself in a situation where you're like, well, what am I gonna do? How am I gonna? If you like know where you're at and kind of stay within your boundaries of being able to do something, unless you know you start making more money and plan for those types of things, I
Yeah.
really think that you should be, you know, you could control it.
Yeah.
Yeah, absolutely. I don't know if I told you guys earlier, my background was in mortgages. That's how I got into credit repair. I started doing mortgages back in 02. And while I was doing mortgages, I had a lot of clients who, wanted to buy a house or refinance, but their credit was bad. So I talked to the broker I worked for at the time, and he told me we'll fix their credit. So he showed me what to do, and I just started doing it for free for my clients. And once I got out of the mortgage business in 08, I just decided just to focus on this because I knew it was such a high demand and people needed
Right.
it. And there just aren't a lot of honest companies out there that do it. We're the highest rated, most reviewed on Yelp. We have over 165 5-star reviews because we have integrity and we're honest. And if I can't help someone, I'm going to tell them, look, I don't want to take your money because I know this isn't going to come off right now, but, come back in a couple of years or do this, this, and this. And that's going to help get your credit scores up until those items can come off the report.
Sure.
That's so good. Yeah.
Thank you so much. Thank you for being here with us today, giving us a lot of great information and
Absolutely.
insight.
And I
Thank
know,
you for having me.
of course, thank you. And I know it's going to be a lot of information to digest. So we will share the resources in our comment links so that way you guys can connect with her and her company so you can get with the experts themselves. And if there's anything else on this topic that you guys want to hear us discuss or bring up or highlight, please let us know. And
Thanks for watching, y'all.
Thank you. Have a great
Thank
day.
you. Bye.